Hey everyone, thank you for joining us for today's episode of Real Estate Disruptors. Today we've got Eric Sage with ericbuyshomes.com, and he's here to share how he's flipped, moved, lease option, buy and hold, and all these other different creative strategies for over 500 properties and doing about 3 seller carry transactions per month. If this is your first time tuning in, I'm Steve Trang, broker owner of Stunning Homes Realty, co-founder of the OfferFast app, the one app you need for wholesaling, and I help people become real estate entrepreneurs. If you're excited for today's show, please give me a wave, please give me some thumbs up. And before we get started, I started this show because I want to give back to our community. I had a lot of struggle when I first started. We've talked about a little bit about some of the struggles you've had along the way, and we want to shortcut that struggle for as many young leaders as possible. I don't charge a dime for this show. I don't make any money doing this, so here's all I ask. This is what it costs for you to listen to this show. If you get value out of this show, please tell a friend. Either share the episode right now, tag a friend below, or tell them your best takeaway from the show later on. That way we can all grow together. And don't forget, this is a live show, so please post your questions. Eric's more than happy to answer them. We don't have to wait till the second half. You can ask them right away. And so with that, are you ready?
Sure, let's go.
Okay, so what got you into real estate?
Well, I'll give you kind of a little history on my background. It's my backstory is I grew up in a small town, Yuma, Arizona. My goal in life was to be a professional golfer. I was very fortunate to play golf in college. Went to the University of Arizona.
Cool.
And after that, I played professional golf for about 3 years. Got the opportunity to do it, and it was a huge blessing. I had a great support group. But after traveling for 3 years and kind of doing my thing, I decided I don't want to do that anymore. So I went to corporate America. Got my first job selling elevators through a friend, through a referral.
Elevator
salesman. Yep.
Who do you contact?
Well, it was a referral. It was a friend of mine was in the business, and my golf got me in the door. I'm the regional manager that hired me took me out golfing after the interview, and after that it went from.
But you're door knocking.
Door to door. I mean, we have. You look at all the buildings being erected right now. There's an elevator in there, and so we had repairs, we had service, and new construction. So I was kind of involved in that.
Interesting.
Did that for about 6-7 years, and then got into the medical distribution business and sold diapers, adult diapers. So we went from elevators to diapers. And right when I started the diaper sales business, I started door knocking pre-foreclosures. I wasn't married, didn't have kids, and I was always an entrepreneur. I was always looking for ways to make extra money. Right?
And what year was this?
So that was probably 2003, 2004.
Okay.
Right? I bought my very, very first rental property in 2003. The wrong way, right? Realtor found it.
Yeah.
Didn't make any money, didn't have any cash flow, the whole thing, nothing like I know now, like how to buy a distressed property at a discount. So anyway, fast forward, started door knocking, found a house. Let me tell you that, like, my very first door knocking experience.
Oh yeah, please.
It's pretty cool. So a friend of mine says, you need to start door knocking pre-foreclosures. Well, I didn't even know what a foreclosure was, much less pre-foreclosure at the time. And so I picked a list of properties in the area I lived in, which happened to be in Chandler, Arizona. And very first door I knocked on said the house was going to foreclosure on a Monday. Okay. So I knocked on Friday.
So you didn't give yourself a lot of time.
Well, I didn't know what I was doing. I didn't have cards. I didn't even know all I knew is I bought a rental property, right?
Right.
So anyway, I knock on this door. And so, nice house, actually in Warner Ranch, so not far from where this is being recorded. And knock on the door. Now, picture the biggest lineman for the Arizona Cardinals, answering the door. That would be your vision of who answered. And I'm like, hello? I think your house is going to foreclosure. He's like, no, it's not, and slams the door in my face. I go, hang on a second. So I went back to my car, wrote my name and phone number on a piece of paper and gave it to him and said, hey, if something changes, give me a call.
Yeah.
First door ever, okay? Sure enough, I get a call. From who? From his wife. So they had an issue. Their house was in foreclosure because their bankruptcy got discharged. So now they're $52,000 in the arrears, and they need to get the money by Monday at, auction at 2:00. Okay.
Yeah.
Very first house ever. So now what do? I call up my local real estate buddy that sold me my rental property for fair market value or higher, and said, hey man, I got this deal. What do I do? And he's like, I don't know. I don't even know what a foreclosure is either. Most agents back then, 2003, 2004, weren't real sure what that was. Right. But a friend of mine, he goes, but you know what? Our buddy, he doesn't work a lot, but I think he knows how to do this stuff.
Yeah.
And I'd actually played I was at a wedding with this guy a few weeks before. So I call him up. I'm like, hey man, I got this deal. He's like, how did you get that deal? I've been door knocking that house for 1.5 years. I'm like, I don't know. I mean, God was looking down on me. I have no idea.
Right.
So anyway, it'll go toward, so we ended up saving the house, stopping the sale, saving the house for the family. We worked out a deal. I got paid a fee, and my mentorship, started. Like I started working with this guy because I'm like, this is awesome. I made a $3,500 check. We got this house. We saved the people. They live in the house still, which probably wouldn't do pre-foreclosure bailouts and leave them in the house program anymore.
Right.
It worked out for me because we were ethical and did it right. But that's what happened.
Yeah.
So that's the how I found my mentor, because I brought him a deal, right?
Well, that's cool.
And so then I ended up working for this guy now keep in mind, I'm still selling diapers, and I'm door knocking from 10 to 2 on Saturdays for pre-foreclosure houses, because he didn't set me up on the system, so I wasn't wasting my time. Like pure luck is what happened there.
Yeah.
And so I started door knocking, working for him, and he would show up to the properties with me, and we would sign the contracts. And then like the third new Mercedes later that he pulled up in, I'm like, dude, you can't come to these meetings with me anymore. I'm driving my Civic, and we're going to meet, because it's intimidating, I thought,
Right.
And so anyway, I did that with him for about 1 year, figured out I had my own money. I knew what to do, and the mentorship was over, and I went and started buying my own houses. And that's kind of how I got into real estate. It was, and I never looked back. My wife and I got married. She's been my business partner ever since, and it's been a roller coaster if you would think about it, from 2003 till 2018, right?
Yeah, a couple of bumps along the way. So when we were chatting, you've worn many different hats.
Yep.
In real estate. So let's just go. What are all the different hats you've worn?
Well, I mean, I've always I've been a solopreneur, door knocking, right? Finding my own lists and meeting with homeowners, acquiring the properties, working with contractors. I will tell you that I've never actually physically worked on a property because I cause more problems than good. I will literally hurt myself on a job site.
We have that in common.
So I'm not handy.
Yeah.
It's embarrassing. So anyway, but I know how to buy a house cheap, and I know how to liquidate it, right?
Yeah.
But we've had tons of employees. We've had no employees. We've had assistants, not assistants, contractors, non-contractors. We've been hard money lenders. We've been we've been landlords. We've done all of it.
So you've done lease options.
Yep.
Seller carry, assignment, was it agreement for sale, subject to.
Yep.
I mean,
we had a short sale business.
Short sale business.
Yep.
Right. You had 125.
Yeah. So here's what happened. So like, this is the greatest thing about real estate and the cycle we're in. Like from 2003 till now, like the cycle's probably been the most extreme ever in our history. Would you say?
Yeah, for sure.
So I started door knocking, basically wholesaling, and I didn't even know it at the time. I was getting a fee to bring a deal to somebody so they could do whatever they wanted to with it. But then I went on my own and started doing my own deals, and we would bail people out of foreclosure. We would help them out, and then they would refinance and get their the house back. We'd keep the house as our equity and security, and then we'd work through the deal. But there was a time, let's say 2005 would have been a good time, but let's say 2006-ish was when it started flattening off, and we were looking for equity. There was no more equity in the houses.
Yeah.
And so I told my wife, I'm like, I don't know, like we have 70 houses. The market's doing some weird things. And we don't have, there's no more equity deals. Like, what do we do? And this is before I know what I know now, which there's tons of free and clear houses all over the planet. but I was just searching a different one way.
You were only searching pre-foreclosures.
I was just doing pre-foreclosures, right?
Yeah.
So, and it was very profitable for us. We were very blessed, and it worked out. But so then we decided, well, wait a minute, what's going to happen to these people that owe more than their house is worth? So we started a loss mitigation company, and then that worked out okay. But then we were spending 6 to 9 months mitigating.
Yeah.
When the banks didn't even know what was happening.
Right.
So we were charging fees, and then you couldn't charge fees anymore. So we just decided, okay, we're going to do a short sale company, and we're going to help people get rid of their houses. And so we did that. But we did that for a period of time where we had 125 deals going at any given time. We had a loss mitigation department of our own. We had realtors. We had a marketing team. We had sales guys, and it was great. We saved a lot of people's houses. It was awesome. Mm-hmm. But then the market started changing. This is a great thing about the cycle of real estate. So when you're in it, the cycle started changing, and we're like, wait a minute, we should buy some of these. I mean, the house down the street I bought for $175 at the peak, and I can buy the same house for $25,000. You think that's probably a good time to buy? Probably, right? So we started buying them. So now we started buying them. When the market crashed, it was a race to get rid of everything, which we did, fortunately. And then we started buying them at the bottom, and then the market went up and started selling them, and then kept a few. Mm-hmm. But keep in mind, all of this is a very active business. It's very, very active. You're making good money, but you're waking up on Monday, and you're like, okay, how many houses are we going to wholesale? How many houses are we going to flip? What are we going to do, right? Mm-hmm. And so fast forward to today, of where we're at today on seller financing, and that's what I figured out when I did my lease option program is I provided a ton of value. Mm-hmm. I made really, really good money, and I didn't have to work very hard because at the time we kept the old owner in the house. Yeah. Their intent was to keep it and refinance it, and they did, because after 6 months of good pays in a heartbeat, they were refinancing most likely. So we charged them a fair fee, and everyone was good. Well, now I was like, I told my wife this. I said about 18 months ago, I'm like, so we had a thriving wholesale business. We're doing very well. We have employees. We have this whole thing, and we're marketing. We're doing direct mail. I mean, you have these shows with all the direct mail champions, mm-hmm. and all the talk to people, TTP, and you have internet and all this stuff. And it's a huge expense every month, right? To do that. And I'm like, where do we provide the most value, make the most money, and work the least? Mm-hmm. It was back to lease option world. That's where we were like, wait, this is amazing. Let's do that. So we have now fast forward, and now we've created that similar model, mm-hmm. right? The only difference is instead of lease option, it's seller financing, because we wanted to get rid of the expenses that go on being a homeowner, right?
Right. Well, and when you talked about this in our meeting a couple of months ago, a month and a half ago, it blew my mind. So we're definitely going to have to redo some things in 2019. So along the way, we'll talk about seller carry in a little bit, but you built your business up.
Yep.
Massive team, right? Short sell. That's probably when you were the biggest. I'm going to guess. Is that when you were the biggest?
Yeah, I mean, we would have anywhere from 8 to 15 team members, mm-hmm. And then in the wholesale world, we're probably the same, And
then you transitioned to a traditional real estate team?
Well, so what we did is I would do direct mail.
Yeah.
And I would take the calls, and I would go meet with the homeowners, and then I would figure out how to dispose of it. Mm-hmm. So I was a one-man show again when we started cycling back into wholesaling. But now keep in mind, I will fast forward. I'm kind of going all over the place a little bit. Sorry about that. I did take a little stint out of real estate for mm-hmm. about probably 18 months.
Yeah.
And bought a different company, and was like, this is the dumbest thing I've ever done in my life. I mean, I have all these employees again, and so it does go back to. I'm going to shut my phone off here so you guys can. There you go. So it goes back to like managing people, right?
Right.
Managing people is a challenge. I would say for me, like it's most.
The greatest challenge for every company.
Right. Yeah. And so anyway, let's go back to where we recently were. We had real estate agents, mm-hmm. and real estate agents want to get listings, but majority of them don't know how to market. They're mm-hmm. not great marketers, or they don't have the money or something. And so we're like, okay, let's hire some really good real estate agents to take in all of our leads, right? Go meet with homeowners and buy the properties for me and get paid.
Yeah.
And if that doesn't work, let's list them, right?
Right.
So
This makes a lot of sense.
So we have an army of agents out there doing that. And so, but what recently has happened is the marketing has gotten so expensive that the margins were it just wasn't making sense. And honestly, we had amazing people on our team. Majority of the people, and I tell all the people that come and work with me, is there's nothing proprietary here. I mean, go on the internet, you can figure this out.
Yeah.
But if you want some confidence, come work with me, learn it like I did, and then go move on.
Right.
And do it yourself. Right? I mean, that's the thing. That's what I've told anybody. So in real estate, it's very transient to have that happen. So to keep people on, and other than your assistants and stuff. But that's kind of where we're at now. So I was like, how can I run, 15 to 300 seller finance deals, and how does that look employee wise, right?
Right.
I can pretty much run that entire business with like one person, other than myself. Yeah. Because you don't own the properties, you don't have taxes, you don't have insurance. It's all being paid, and so that's where I phased our business into. And there's a combination of reasons why. Is number one, we'll talk about this, but the private money side of raising private capital, private money, and doing it right, and not forming a syndicate and all this other garbage. I really believe that we're providing a ton of value for that investor, right? Because we know how to buy really good properties. Okay, so that's one deal. And then the next is helping homeowners get rid of their distressed property and get them as much as we possibly can and still make it work for them as quick as possible, as easy as possible. And then find a homeowner, a buyer, and a realtor and a buyer team that can actually own a house now that never would have been able to own a home.
Traditional financing would not have worked for them.
They're not going to go to Wells Fargo, Bank of America, or any of these and get a traditional loan because they own a landscaping business or a pool company or a realtor, right? But they have they've saved their money and they can afford the payment. And so that's kind of where I went. And, we talked about this earlier. That I get excited about that. Like flipping a house and making $20,000, it's pretty cool. You're revitalizing neighborhoods, right? Or you're wholesaling and starting the revitalization, which there's a purpose there, but the whole, where people right now are getting displaced. You go to the areas where we're buying, where the seller financing thing works. The investors bought these houses from 25 to 60 grand, and now they're worth 150, right? Yep. As is. Now, what's going to happen to that tenant? Where are they going to go? Right. They've lived in a house for 10 years. Well,
now they're priced out.
So how can I create value to them and still give them ownership and not have to be a landlord and deal with all the stuff that becoming a landlord is, and still make the profits and the cash flow and all the things that make sense, right? Right. So that's kind of where we're at.
So the thing you mentioned earlier about, doing a syndicate and how that's a really bad idea. So Jamil right here comments, the quickest ticket to jail is a syndication. He was the one that gave me the wisdom when I first got into wholesaling seriously. If you want to if you want to be on American Greed, start a syndication.
I love it. No, but it's so true. Like I don't. It's like Jamil. I talked to Jamil about that. I don't think they started their business that way. They're not crooks on purpose. They put themselves in a place where they just don't, where they just don't fix the problem, right?
Right. They deny it.
Like you get in a fight with your wife, fix the problem now rather than linger and get divorced, right?
Well, but we know it's not our fault when we fight with our wives.
That's right. We're always right.
Yeah.
Always.
Okay, so let's go through the seller carry, because like I said, it blew my mind when you presented this to us a few weeks back. What is a seller carry, and then after that, what would you do if you're going to get started? So what is a seller carry? Because when I first hear seller carry, I'm thinking I'm going to you, the homeowner, and you're going to finance that deal, which is a traditional definition of seller carry. But when you're talking about seller carry, you're doing a different strategy. So can you elaborate what that means?
Right. Well, you can do a combination, but let's just do that was my goal today, because I knew I was speaking to you, and I'm like, okay, if somebody was going to listen to this show and they've never done real estate, but they the ultimate goal is to create some sort of, nothing's passive, but as close to passive as you can get. and get to, $5, $10, $15,000 a month, which is basically, it's a game changer. If you can, what could I do to help that? So number one is, and I read a lot of like blogs and people are like, I don't have any money, I can't start. I can promise you, when I knocked on that first door, I didn't have any. I did have money, but I didn't have the ability to buy that house.
You didn't have 50,
but I had a deal.
50K lying around.
No, I had a deal. I had a deal, and then I found now in today's world, just in our market, but in every single market, there's somebody that would die for that phone call and say, "Hey, I've got this deal. Let's make some money today."
Right.
And they, I know the network that I'm in. We make. If I can't get rid of a house, I might call you or I might call someone else in our network, and we make money. Like it's fantastic, right? So there's no excuse for that. There's none. Like I read about it, and I'm like, there's no excuse, because you can get in your car and drive by and see a house with grass that's growing higher, and it could be distressed somehow. You can figure out a way to find that person.
Garage door's a little uneven.
Or if you can't figure it out, someone online knows how to figure it out and doesn't even know, because I promise you and I are not door knocking and driving by every day. No. So we don't know what we don't know, right? So anyway, so that's my thing. So there's no excuse for that. So back to the seller financing deal. So right now, I can get a house. I get a house sent to me probably every couple of hours that fit our model, right? So we want to buy a house somewhere in that 130 to 150 range, okay? And right now in our market in Phoenix, and this is all over the country, a lot of houses were bought at the bottom and were remodeled and rented, and now they're rental condition, so we can go clean it up and sell that for retail, right? And so what we do is we find that house, and then in the meantime, I have investors that are looking for a fair rate of return, okay? Maybe they've made tons of money in Amazon, they cashed out before the market changes or something weird happens, and they want to get a fair rate of return. So I offer them a fair rate of return, or I partner with them or something, but they're secured to that property, right? So I find property A, I find the property, I put it under contract with the wholesaler, with you, with whoever, and then I have that money waiting in the wings to close on it, right? Then it's pretty simple. Then I go and I have a real estate team, but I've also, for fun, I've built a massive buyer's list of people that can't get a traditional mortgage, okay? And so now they are my, a lot of the wholesalers are talking about their cash buyers list. These are my seller finance buyers list. So there's a lot of them, a lot, 20, 30,000 down in our market. They're everywhere.
So there's a lot of people out there that 20K to 30K to put down that cannot get approved for a loan. And you have this list.
Yes.
It's amazing.
Yes. Okay. So I have that list. Now, I also have realtors that have that list. I mean, how many realtors out there have someone, but they're basing their whole world on getting a traditional loan, and so they lose a deal because of it. Well, I can buy wholesale, sell retail. I'm not selling for 20, like there's other guys that do what I do around the country that mark it up 20, 30% over retail. And I'm like, no, that's not even, like we can sell these for retail and make money. We can get a good down payment, a fair interest rate, based off their financial situation, but we're putting themselves in a place where they can actually make the payment. And typically their payment's going to be 5 to 10% over rent, okay? Then they get the deduction, okay? So anyway, property, I get the property, I got the lender lined up. Now, so far I haven't spent $1 of my own money, right? Okay, but I found the house that was sent to me in an email that I could probably pay more than most wholesalers.
Because you're
more
strategy.
Cash buyers, because I've got my exit cash buyer on the hook, that I don't have to do a $30,000 rehab. I might have to do a $5,000 rehab, right? So now so my underlying lenders here, my end buyers there wanting to buy a house and be a homeowner, and we close the transaction. I make a little bit of money, and my investor makes a little bit of money, and then my agent gets a commission, and life goes on.
So that's not one close though, right? That's two different closings.
Right. So you have your acquisition closing, pay a few fees there, and then you have and the ultimate is find one long-term investor to fund your acquisition and stay in place, right? And then resell it and then create the cash flow in between, just like any rental property, you know. But the rental property, here's the thing about the rental properties. So what do we have when we own a rental property? We have, and one of my best friends, he lives in California, and he manages his own properties, and he's been doing it forever. And it's his family deal, and that's how they do it.
That's weird. Anyway.
So we just had an argument this morning, and I said, listen, so what do we have? We have management, we have maintenance, vacancies, repairs. What's the last one? Anyway, we have the 5 or 6 different things taxes, insurance. There we go.
Yeah.
So we have all that happening, right?
Mm-hmm.
When I do a seller finance house deal, guess what I don't have? None of those things. And I have equity in the deal, depending. And so, people talk about this, and I'm, this is something we could have discussion about. People talk about depreciation and appreciation and how it affects your taxes. Mm-hmm. Well, I just eliminated 30%. So how does that look, right?
Right.
And then I have equity in the note that I've created because I know how to buy a house under market.
The 30% you eliminated. You talking about you eliminated the
depreciation. The 30% of you get some tax benefits for being a property owner versus a seller finance. It's regular income, and I'm not a CPA. I'm not an attorney. Disclosure, but I just look at the real money that comes in without the headaches.
Yeah.
Right.
So let's highlight those 6 things there again, because that sounded great, right? So vacancy.
So you have a property manager, and that's what I told my buddy. So how much a property manager? Well, it's 8%. Okay. Do you have any vacancies? Do you have any? So you have property management, vacancies, repairs, taxes, insurance. Well, I think we're missing one again.
Well, there's turnover.
Right?
So and that includes vacancy, but that's new carpet, because it seems like carpets last about a year.
And repair when you have to update it.
Yeah.
And that's what I said. He goes, I had eviction. And how much are you going to spend on that rehab?
And then that doesn't include, depending on your property manager, a leasing fee.
Absolutely.
Right.
No, this is all. And then my fee is, it's between $10 and $18 a month for a servicer. And guess who pays for that? The borrower.
Right.
So I don't pay any of that.
Okay.
And so I've eliminated, and I was telling you this earlier, and this was so cool. So I get a call from the servicer yesterday, and there was an insurance claim, okay? Roof issue, whatever. And they're like, you needed to sign off on the check. And they thought the lender was here. And I'm like, no, just have them call me. So they call me, and the sweetest lady ever. I've never heard from her ever. I didn't even know, actually. I knew it in my file who it was, but I've never spoken to them. I never speak to them. My agents do all that. And she needed me to sign off on her insurance check. And so I said, okay, I'll you know what? I'll meet you. Because I love meeting them and see how appreciative. She was so appreciative. She's like, Eric, I'm so happy to actually hear from the company that's lending me the money into my house. And we're so happy. And we're going to redo the roof, but we're going to pay a little extra because we want it to be a different color so it matches this and matches that. And because we rehabbed the house already and whatever. I'm like, oh my God, that's fantastic.
Right.
Why not, right? And so that, to me, I get so pumped to have that call that they appreciate, and they pay like right on time every month.
Well, they have to.
Or they lose the house.
Yeah.
And they put such a chunk of money down that they're not going to.
And the thing you mentioned briefly or casually was that they remodeled the house.
Yeah, right? They updated it. I did some work. They did more work.
But like if a tenant's like, hey, I want to update the house, like hell you are, right?
No, they actually paint the walls the wrong, whatever. It's not. And now my asset just went up another 20%.
Right.
And my loan to value, I'm still covered, right?
Yeah.
There's a few things that people, they're like, well, what if the market tanks? I'm like, okay, well, I've put a fixed number in place on my cost of money, and I've given them a fixed number.
Right.
So God forbid the market crashes and our houses are worth $25,000 again. Let's just say it happens. But where are they going to move for $1,400 a month?
Yeah.
And still own. Right?
Yeah.
So there's a risk there that I feel, this is just my opinion, and we could talk about this 10 years from now and be like, that was a mistake. But I really believe that and I mean, I can't tell you how many times I bought a house, this is a few months ago, and I went and met with a neighbor, and he's been there 17 years. Yeah. That's what I want.
Right.
I want payments for 17 years. Right?
Right. So starting over again, step 1. Right, I want to follow.
Okay,
the Eric Sage model.
So you've never done a deal ever. How do I do this?
Well, I've been doing wholesaling.
Okay,
right?
you're talking about you, not your
hypothetically,
your
Steve, yes, wants to move from wholesaling to seller carry. So what's step 1? Getting the money. What's
I personally, because I mean, you can use my track record because it works. Is I would go find some private money. And so here's the thing. So I might have been telling you this before, but so you have your high net worth people, right? They have tons of money, and if they can make a 7-8% return over a lifetime now in today's world, and they've already crushed it, that would be pretty good, right?
Right.
And so they look at that as a diversified deal. They might have a huge estate, and they don't want their kids to get a bunch of money, but they would give them income. So that's one place to maybe go raise some capital and tell that story. Or you have somebody who's in their between 65 and 70, right? They want to retire, and they have, let's just say they've saved $1 million, and they have $1 million left until they pass, right? Well, I feel, my opinion, we're all going to live till about 100 now.
Yeah.
I mean, I'm 46 years old. Being 100 years old is going to be nothing. Okay, so that 60, 70-year-old person, now they have another 30 years. They're going to outlive their money.
Yeah.
So I feel it's my obligation to help them get a great asset secured in first position, a mortgage, and get paid for forever.
Right.
And then keep the balance, right? So maybe they take the interest, keep the principal. There's all sorts of ways to do it. But I feel it's an obligation for me as a really good real estate operator and knows how to find a great deals and put them in a really good position. Not 110%, but like 75, 70, I feel is a good place right now in today's market, even if there's a decline, that they're going to get income. And it's amazing because, and I feel like I'm a really good private money raiser with real estate is that they, once they start getting that money, they can't, it's like, I don't know what I did. I just get paid.
Right.
I'm like, so what's your, and this is another thing, this happened to me the other day. So actually it was a few months ago, I asked one of my private guys, I'm like, so how's your debits and credits on your private lending business? And he goes, well, I don't really have any debits. No, I don't have any. I don't have any debits. It's just credits.
Right.
The only debits I have is when I pull money out and put it into a loan. So you're not paying taxes, insurance, maintenance, repairs, any problems? Nope. I just get paid. So that line item is just income, is what you're saying. You don't have all these other things. No employees. Do you have any employees in the business? Nope, none. So I decided, okay, how can I do this in the owner-occupied world and do that? So I know I got sidetracked a little bit on the purpose behind this, but so raise the money. Go find somebody that wants to do. Let's use Phoenix as an example, and that you get $150,000 in a first position to do your seller finance deal. Then properties are easy to find. I mean, you probably have one right now on your list of houses that you're wholesaling that will fit.
Hopefully.
Yeah. And then then you do that, you buy it, and then you go and if you want to do it slowly, I always have people go and look at it and do little repairs so it's move-in ready. Like the big things is I want the roof to be okay. I want AC good, plumbing and electrical. And then let them go do the sweat equity.
Right.
I want the big stuff taken care of, for the most part. But I have guys that come in and be like, no, we'll do it all. We'll do plumbing, we'll do it all. We just want a good deal. Okay.
So
a good deal off retail might be 5-10% off. Where for us, that's like, we're happy. If we don't have to do any work, right?
Right. So you find the lender, right? And then you have to have some sort of agreement with them. So you're paying interest right away, paying interest when they lend. So
what I do, and this is obviously from, trial and error, but what I do is I say, okay, we're going to fund this deal. This is what I'm doing with it. You're going to make a fair rate of return in a great position. You're going to get paid monthly, amortized, and I'm amortizing. So I'm front loading them just like a bank would. Okay. So then from there, I'm gonna start your first payment's not for the first 60 days, because that gives me time to go clean it up and get it sold. Right. So I'm not doing a negative cash flow off the bat.
Right.
That's the ultimate. Doesn't always work that way.
That's huge.
It doesn't always work that way, but does it really matter to them? Like, what's their money doing right now? It's sitting in cash, earning like a 1%.
Yeah, but that's smart on your part, giving yourself a 60-day head start.
And it's a contract. Like, after 60 days, if I don't sell it, then I'll start paying. But for the most part, that's how I structure it.
Yeah.
Okay.
And then you have, I think you mentioned before that you or someone got a loan originator license.
So what I did, I like to stay completely out. So now, in order for me to qualify my borrower, so now the house is now for sale.
Yeah.
Keep in mind, all my houses are sold off market. I don't even put them on the market.
Right.
I send them either to my list, and on my list is agents that have buyers, so I'm good with that. I'll pay them a commission. I don't care. And then contract comes in for the price we agreed to. Then that goes right to my licensed originator, and he underwrites them. Make sure that they are. Majority of these borrowers, they're stated. But he gets proof of payments, proof of income, proof of not
It's
everybody.
still a real underwriter.
Oh, it's a full-on. Most hard money lenders out there don't like to do owner-occ because of the liability. These guys, that's their deal. Yeah. And so it protects me because if they're like, oh, you sold me this house for X and I can't afford $1,500 a month. Well, it says here you did this, and this. I have him do it. I pay him a fee, which actually the borrower pays for that, but he gets paid to do that. And then he reviews it with me and he signs off on it and it's done. So it's a fully underwritten, originated loan.
So it sounds like when we're ready to do that, I'm gonna have to get that guy's contact.
That's right.
And then on top of that, you have a servicing company.
So then, yeah. So right now I'm testing different servicers, but in a perfect world, as we scale this out, we're gonna have the same insurance guy, we're gonna have the same servicer, same originator. Blah, blah, blah. It's just process.
Okay. So then, that's the part that's kind of nuts, right? Is this crazy part where you've got this formula working now. Now to feed this machine, you still got to find deals.
That's right.
Right. So who's bringing deals, and what does a good deal look like to fit into this model?
Well, so right now I'm getting my deals. I'm still doing direct mail. I'm still doing internet. I'm still doing all the same things. Like I'm still wholesaling houses. Yeah. Here's the greatest thing about this model is your goal for me, and I would hope other people, is to get that monthly cash flow to offset your wholesaling business net income. And then once you get to that, then you're like, it's just, everything else is a bonus, right? Because, buying and selling houses and helping distressed sellers get out from underneath their homes is a great business. Yeah. It's a great purpose. Because, I can't tell you how many people call me, you call me from Tennessee and, Aunt so-and-so, gave you this house. And you think you're going to have to fly out and do all this stuff. No, did you know I'll go and box all that stuff up and send it to you and you'll get a check wired to you. Yeah. How easy is that?
Right.
Oh my God, that's fantastic. That's the value that we provide as wholesale buyers, but because they're not going to be able to rehab it for what we can. The whole spiel. I'm not going to tell you the spiel on it, but you guys know it.
Are you getting more from your direct mail marketing and online marketing versus another wholesaler bringing you a deal?
So our direct mail's working, and it's very competitive. We're competing against everyone else, but honestly, I've slowed down a little bit, and the reason why, I don't know if I told you this, but I have a fund that is going to fund my deals, and so like a pretty large fund. So I've slowed down. I haven't been really building my private money business that much because this fund said they want to do it and the numbers make sense. And at that point, I can go to every wholesaler and probably pay more than anybody and still make the numbers work. Yeah, you know what I mean? Then it's just an arbitrage game at that point. Right. And it's non-recourse, which is good. Huge. That was what Chris Iman said in the show a couple weeks ago. Like, if you had to do it all over again, what would he do differently? Ask anybody that's our age that has been in the business as long as we have. What would they say? Non-recourse. We all got caught. Yeah. But you learned eventually. So Scott Charles got a question. So we talked about finding the high net worth individuals, right, to fund your operation, or in this case, you got an investor group. How would you go find an investor right now to fund all this? Well, there's so many different ways, but I'll just give you a simple one, which is, chances are, I have a friend of mine. He's 36 years old. He's had 2 different jobs. Okay, but 2 different jobs from 25 to 36. He's probably got he has like $600,000 in 401k money from 2 different places, right? But now he's starting job number 3. Okay. Well, that money at 36, he can't touch it till he's 59 and a half, right? So that money is sitting idle doing, well, it's in the 401k that they left it or whatever, But what if you could help him self-direct that money into a self-directed IRA and then use that as your funding?
Right.
Now, we call it the $4.7 trillion secret, which if you guys email me, you'll give me information. I'll send you the book because we wrote a book called the $4.7 trillion secret. So it's how to raise private money, and it's not a syndicate. Tell people, ask anybody, what are you doing with your idle cash? Well, what are you earning? Probably between now I guess CDs are going up a little bit, but under 2%, right?
Right.
Maybe 2%.
Yeah.
But before it was like, right?
Yeah.
So you can't make money doing that. That's not even inflation. So if you offered them 7-8 times that and you can still make money, or you partner with them on the cash flow, or you if you've never done it before, maybe you do a little of both. But just as long as the cash flow makes sense for you for your time, that's what you do. So there is so much money out there right now. And I actually did. I was talking to one of my buddies the other day. He sold his company, and he's a company guy. He likes to buy companies and buy something for $1 million, sell for $10 million or whatever, right?
But I'm like,
yeah, but what are you doing with your idle cash?
Yeah.
Well, it's in the stock market and it's doing this and blah 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 blah. And I'm like, okay, well, are you getting income from that? Monthly income? I mean, what are you getting from that? Is it amortized out? How does that look? Could there be a change? Could the Tesla owner do something stupid and drop the freaking stock market? I mean, all of that, like, how does that look, And then where is that cash flow coming? Is it coming from an end borrower that's, thanks God every day that they have a home to live in with their family? And if that doesn't work, they'll bring in another family to pay the payment. Like, it's not sexy. It isn't. It just works.
Yeah.
Right?
Right.
I mean, so to answer your question on the private money, it's everywhere. Just tell everybody that you have deals and you're willing to pay X amount. And if you're interested, let's do some deals. Let's do some business.
Well, I think I heard you say before too, you don't even tell them what you're willing to pay. It's like, what are you willing to take?
You can do that. I mean, I'm pretty open about what, I'll tell you right now, I pay, if I do a flip, it's 10% deferred, no points. Pay them, and I guarantee 3 months on a flip. So it's secured. They fund the deal. I've been doing this a long time. They get paid back. All my private lenders, I've never defaulted on a private lender ever in my history, and I've borrowed a lot of money. And then my long term, I try to get 6 or 7, know? And people have a hard time with that. Like they're like, wow, that's not very much. Okay, well, what are your options? Right. I mean, let's be honest. Now, if you want to be passive, that's a pretty darn good return.
And it's collateralized.
It's collateralized. You want to, so I was telling what buddy the other day. I said, okay, you have so I give you $1,000 a month for 60 months, and you give me $150,000. 60 months later, you owe 90. Now your risk is 90 on a house. It's even if it drops to 150 or 130, that's still, you could sell that and get your money back pretty easily. In fact, I'll buy it from you for that. Right. So just as long as that's why I love the lending world. That's why I love that deal. And really the end result is who you're helping at the end. You're helping this guy get his income. You make a little bit of money. You're never dealing with banks. It's just, it's quick, and you're providing a good service.
Candace Walton wants to know, what's the difference between a lease option and seller finance?
So a lease option is you own the house. So for example, I buy the house and I own it, and then I take maybe $10,000 down, and I give them an option to buy. So let's use round numbers. Let's just say I buy the house for $150. I sell it on a lease purchase for $170. Take $10,000 down, and then they have 5 years, 2 to 5 years to give me the $160 that they owe me, something like that. But I still own the house.
Right.
I still have the responsibility for taxes, insurance, maintenance, all that stuff. I've been successful with a lease purchase. I have, but I like it. I almost want closure. Like, it's done now, unless they sell it or refinance it.
Yeah.
As a lease purchase, I've done really well with lease purchases, but I don't like the responsibility of being an owner. There's liability.
Right.
There really is. I mean, you have all the things that go with it. So if I was going to pick one of the two, I'd do the other one.
Right. And as a seller carry, they're the owner.
They're the owner.
Lease option, you're the owner.
I'm the owner. Yeah.
Right.
Yeah, and they're the owner.
And then we talked about pride of ownership. We talked about it a little bit earlier. But if I was driving down a neighborhood, I'm seeing Eric's seller carry property.
Yeah.
And I'm seeing someone else's rented property. What's the difference?
So great question. So I bought a house, I don't know, let's say 6 months ago. It was in good shape. It wasn't the best house on the street.
Mm-hmm.
It wasn't the worst, but it fit their move-in criteria, right?
Yeah.
So they put their money, I think they put $25,000 down or whatever. So a month later, I was going to go drive by that. I was driving to go look at another property, meet my agent over there, and there was a house. You know, they redid the landscaping. There's flowers out front. It's painted. I mean, it's like the nicest house on the street. And I'm like, how awesome is that? Like, that's not a rental property. They own that house,
mm-hmm.
and they pay. I mean, I made a mistake. I made a mistake one month where they actually paid early, and I couldn't figure out. I'm like, God, I don't think they paid. Well, they paid too early. I couldn't figure out the books weren't right on that month or something. So, but yeah, that's the deal.
Okay, so then let's go back to an example. I get your mailer, call you.
Mm-hmm.
Hey, Eric, I got this house. It's worth $200 open market. It's a little bit of disrepair, right? Where are you buying it at for it to make sense for this model? And then what are you doing? What are exact steps you take after that?
So house comes in to our team, if it's me or the agents or
it's 200 in Maryvale.
Yeah.
And it needs 15.
Right. So Maryvale's now 220. So whatever. Yeah. Anyway, no, that's a seller finance house around be 210, 220. So what I do is the first thing I do is I take the call and figure out what the best price we can go to. Mm-hmm. Right. We really, depending on repairs, we probably need to be around 150-ish.
Yeah.
But so that would fit. So then I literally text my agent and be like, hey, what could we sell our finance assets for? Mm-hmm. And he'll be like, oh, well, I have someone in my database that likes that area, and they want to, they have 30,000 and they'll pay probably $215,
mm-hmm.
and they can afford this much a month, which I already know those numbers. That's it. So that's because I know the exit. Mm-hmm. That's the most important part. And then I know my cost of funds, and I know I could resell it for them, what their payment typically is, and then I just back into what I want to make.
Okay.
And typically, I think 400 to 450 is a good number to take the risk. I think anything less than that, I think, even though there's spread in the deal, I
400 as in cash flow.
Cash flow, yeah.
Okay.
Yeah, that's right. That's kind of my.
So if you're not making 400 to 450 cash flow, that doesn't really make sense.
No.
It doesn't fit the box.
No, or I just have them put more money down or whatever, so you can play the deal. But that's kind of the round figures.
Okay.
Or with a rental property, typically you're going to put 20% down, you're going to rehab it, and then you're going to leverage it, and then you're going to pay all those expenses and get what, $200 a month, maybe?
Yeah, pretty much, with the headaches.
With the headaches.
Expenses and headaches.
I mean, the turnkey, like, believe me, I tried to get I was looking at turnkey all over the country, right? Mm-hmm. And so I really thought it was a good model. But when it was all said and done, like, there's no money left over. It's unbelievable. And not to mention, all the turnkey markets that are crushing it right now, mm-hmm. ask them what their property taxes are every year. They're 3 times certain markets. I won't say our market, but they're just keep it quiet.
Okay, so then let's go back to the property you picked it for 150, right? Because seller carry, it's not just the cash flow, which is an amazing part of it, but there's front end and there's back end. So let's talk about all the different.
Yeah, so typically, the average wholesale was $7,500 to $10,000, mm-hmm. the wholesale fee right now these days in our market. You can typically, in our seller finance world, with the down payment and the cost of rehab and the closing costs and all that stuff, there's $3,000 to $5,000 left over, mm-hmm. profit upfront for us. Yeah. Okay, I typically like to get more, but we're not going to squabble over that because I'm also getting another $5,000 a year.
Mm-hmm. So it's $5,000 up front.
Yeah, typically about $5,000 up front.
$5,000 cash flow per year. That's not stopping.
Per year.
For like 30 years, right?
Well, let's just say it goes 5.
Yeah.
60 months,
Yeah. So
that's $30,000
mm-hmm.
plus the 5, that's 35.
Plus the profit when they do
there's
sell
typically, because we're selling it retail, mm-hmm. and we're buying wholesale, so there might be 20-25 in that deal too.
Right.
Now, obviously they pay it down a little, but you're also doing the same on your side. So what I did is I amortized both sides so we're not catching up to each other.
What do you mean?
So if I have a loan here, let's just say 150, amortizing at 7,
mm-hmm. and
I sell it over here and then loan's 180 at 8.5% mm-hmm. amortizing, I just want them to kind of move along together on the amortization.
Right.
So it doesn't catch up and go past it. That's the right way to do it.
So you're doing cash flow on the difference in the mortgage payments, and on the arbitrage as well.
Little cash flow on the amortization too. So if you get an amortization calculator, you can kind of figure it out. But
right.
I mean, it's next year maybe $150 maybe.
Nothing to sneeze at. I mean, if you got
savings.
10 of those,
it's like savings.
You got 10 of those, that's real money.
But here's the thing: like the spread in the note is great. The borrower has equity, but I just look at that as a bonus. The thing refinances. I mean, the reality is, my ultimate goal on a lot of these, I want to be the lender on this property forever.
Right.
So if someone contacts me and says, "Oh, I'm selling the house," really? Who's the buyer? Can I have an option to be their lender?
Yeah.
Because why not?
Right.
Why wouldn't you? And then you just start over again.
Yeah.
So you don't have to go find a place for your investors' money.
And so you've acquired a few of these. Like I think 18 months ago, you started taking this refocus back on how can I do less, enjoy more, right? Actually get to travel with your family, right. The dream of every real estate agent that never does it.
Did I tell you what I did this summer?
No.
So there's a company, you guys can Google it. It's called Mind Valley. And so Mind Valley goes to a different country every year for a month. And it's like personal development, business, it has all sorts of stuff. So my wife's goal in her life was like, we need to go to a country every year. And I'm like, okay, let's work that out. So we did it. So we were there for 2 weeks. We were in Estonia, which is near Russia. I didn't know that at the time, but we were there. And so with our note business, like I literally didn't do anything. Like I didn't take a call. I mean, yes, we had some marketing going that was being taken care of by our agents, but the note business still paid. Like the money still came in. I didn't have to deal with it. It works that way with rental properties too, but we were literally gone for almost 20 days in a different country, doing our thing, having fun. And then this summer, I think that they do it. We're going to try to do it for the month for our kids. I don't know if they want to do that or not, but we'll figure it out.
Our audience right now is wholesalers, right? These is predominantly who people are listening to the show right now. So what we're telling these wholesalers is it's very realistic that if they wanted to switch gears, they could, in 12 months, potentially acquire 12 seller carry properties.
Absolutely.
Right? And with the 12 seller carry properties, let's just say $400 a month, right?
Yeah,
so instead of
$5,000, right?
Instead of wholesaling for $10K, just get $5K up front, have passive income, and have 10 of those. That's $4,000 a month, passive, and you can go hang out with Eric in Estonia or wherever Mind Valley is going next.
Well, here's the thing: the wholesaling business will never stop, right? We're always going to be marketing, right?
Always on the go.
Always market. Always market. Always tell people that you're a cash buyer. But when that deal comes along that fits that deal, then you can wake up a year later, 5 years later. I don't know what your overhead needs to be. I mean, we talked about this earlier. I mean, how much money do you really, making $500,000 a month wholesaling houses with 47 employees and $1 million a month in marketing makes sense for some people. For me, not so much. I don't need that. I'll buy all those properties that they produce and I'll create a cash flow. But I really believe the wholesalers, it's really hard for the wholesalers with these big operations to look at $400 a month as like, this is exciting.
Yeah.
But they're doing so much volume. I'm like, what if you just did 5 a month? I mean, you're doing 30 houses a month, do 5 a month, and now you have 60 properties at $400 a month. I mean, that's 24,000. That's $300,000 a year.
It's okay.
That pays some bills. It does, right?
Bills, yeah, sure.
Not to mention any spread and all this other stuff going on.
Right.
Not to mention you're helping the world with, some retirement people getting income and not losing their wealth, and then, helping other homeowners get a home to live in, because that's
opportunity to buy when that opportunity was not available otherwise.
Yeah. So I mean, that's the way I look at it. I mean, I love wholesaling. I mean, we all do, because it's quick cash and it's great. But I think that this is where we're at in our market is. There's an opportunity.
Yeah.
I mean, could we see a correction and a big drop? I don't know. I don't know. Like, we talk about it. It's possible.
We could have a black swan event, but I think it's highly unlikely to have another.
Here's what I feel. I feel that there's credit, but it's different credit. Housing credit is I think stable.
Yeah.
That's my opinion.
So Scott Charles asks again, how would you build a list of buyers for these properties?
So bandit signs.
Okay.
Let me see if I don't have my phone with it's just, sell. I haven't personally put these out, so they just call in to our office.
Oh yeah, no, you see them in the corner, right? 3-bedroom, 2-bath, pool, $1,500 a month. Call for details.
That's right.
Yeah,
that's it.
So and just enough
it'll
of those.
build. I think we have 500-600 of them right now.
Yeah.
But really, I have relationships with realtors that manage that list for me, so I don't really. I probably would have, as I grow. I mean, we're close, but I'll have a disposition manager that's their whole deal, is meeting with these sellers, and it's the coolest thing ever.
Sounds like an employee.
I don't know. We're working through it. We're working through it.
All right. So, with everything you're talking about right now, do you have like a calculator or something that says, okay, here are the numbers, and it makes sense?
So my business is not that sophisticated, but I do have a calculator that I use on my phone. It's called Carl's Calculator. It's in the App Store. I think it's free.
Okay.
And I just plug in the numbers.
Carl's Calculator.
Carl's Calculator. My phone's off because I didn't want the alarm to go off. But so Carl's Calculator, throw that in, and then you just figure out where you want to be. What's my cost? What's my interest? What's my resale? What's their interest? Amortized. There's your spread. And then obviously you add taxes and insurance on top because you're not paying that.
Right.
So now you know. So now you know, okay, what can my typical borrower pay in this specific market to be a homeowner?
Yeah.
And right now, I think the most is like $1,600 with taxes and insurance to be a homeowner in Phoenix, Arizona.
Right.
That's not bad, right?
Yeah, even if the economy tanks.
I mean,
$1,600 is
for a
still
3-bedroom, 2-bath house, block construction, rehabbed, like that's pretty good, right?
Yeah.
For the rest of our careers, that's pretty good.
Right. And if that's what you're owing your guy.
No, that's not
what you're owing your guy.
No, I'm owing them less than that.
Yeah. So you should be, even if the market dips and rent dips, you're still going to be okay.
And here's the thing, like let's say you have, it's like the wholesale world. And all the big wholesalers that are buying in our market, deal comes through, boom, they're like, I'll take it.
Right.
Well, you do 20 a month, you might have 3 that you overpaid, pay the money and go to the next one.
Right.
Right?
Exactly.
That's the hardest thing to do as a real estate investor, write a check on a bad deal.
It's a lot easier.
But it's the best thing to do.
It's a lot easier than keeping it.
That's right.
So one other thing too is you were talking about the value of a mentor. What can you talk about on that?
Well, so with technology today, podcasts, your podcast, like there's so much information out there. So I truly, I'm in masterminds. I've had a mentor. I found my mentor is I brought them value.
Yeah.
I'm like, here's this deal that you've been door knocking for 18 months.
Right.
Let's make money. And we did. And you know what the greatest thing about my very, very, very first deal? That homeowner still lives in that house today.
Really?
In fact, I've been, I haven't been in the area, but I can't wait to go door knock them and give them a big hug. And they were losing their house within days.
Yeah.
And they're still there with their kids. Their kids are probably older now, but a lot older. But they're there. Like I pulled it up on tax records, same people.
Very cool.
So that's the value that real estate investors can provide people,
Yeah, you solve their problem.
So back to mentorship. I mean, I get up every morning. I would say one of the biggest things that has helped me personally as a personal development side world is I meditate.
Yeah.
And so every morning I get up, I lay in my bed, try not to fall asleep again. But I take 10, 15 minutes and I ask for what am I grateful for?
Start with gratitude. I
always start with gratitude. I mean, it could be as little or as big as you want that gratitude to be for that day. And then I pray. I pray for, it could be obviously my family, but people I don't know. I mean, pray for you. I pray for you today. I was like, this is gonna be the best freaking podcast you'll ever have. No,
it's pretty good.
And so, and then I ask for abundance, asking for greatness to happen to you every day. And then you get your group, your wife, your kids, the people in your network to do the same thing. It's the corniest thing in the world, but greatness happens.
Oh, it does.
We wouldn't be sitting here right now, in my opinion. I know there's the secret and all that stuff, but it's the corniest thing to do consistently over time. It pays off.
Right.
It's unbelievable.
Well, you get what you ask for.
Yeah, you do. And so that's changed my life. I mean, I've been doing that. I'm not super religious, but I'm very spiritual,
Yeah.
And I think that just, if you start your day that way, I mean, I get up really early, like 5, and then I exercise, and then I listen to, when it comes to mentorship, there's a million podcasts out there. I mean, your podcast, I mean, I listened to a few before we came on the show earlier in the week. I mean, there's some freaking smart people out there.
Yeah, there are.
Like, amazing. And then if you just take a little bit of what they learn and implement it,
who knows what can happen?
It's amazing.
And then the value of an accountability partner. What are your thoughts on that?
So probably a year or so ago, it's been longer than that, I hired an accountability coach. Okay. So I pay him, I don't know what I pay him a month. Actually, I do. But he calls me, and this doesn't matter at what level you're at. I mean, if you're just beginning, or if you're, you've got 350 seller finance deals out there, having somebody that you can talk to that's a third party that can keep your shit together and ask you why you're not doing X, and it's not your wife.
Right.
I've tried using my wife for years. It doesn't work. I don't know why, but we work with each other. We help, but we each have our own little accountability team member, and we go over where we're at personally, professionally, and they just keep us together. And I think that's the biggest, that to me is a game changer.
Yeah.
Because they'll call you out.
Yeah. No, it's great. I mean, I have exactly the same
and you
thing
can go
with my
online
coach
and find anybody who will be your accountability partner, but pay them. Like, actually pay them. It's worth the investment.
Pay them. The only difference the only nuance I would add to that is that there are some life coaches out there that have no idea what they're doing. Don't go to those guys. Go to people that.
Yeah, I mean, my guy's awesome.
Well, I'm not talking about you specifically.
No, I know. But here's the thing. Like, okay, so I go back and forth on this, but there's gurus out there that teach how to make money in real estate, right? And those gurus haven't done a deal in ever. And I've been involved with a lot of them because I'm a geek. I love learning, right? Yeah. But here's the thing: you can be a really, really, really good coach and not be good at that deal. You know what I mean?
I do.
I'm personally, I would say I'm an okay coach. I want to get better at it because I love sharing. I mean, I hope you can tell. I love sharing what I'm doing because it's life changing. Like, it changes people's lives. But there are people that are really good coaches, and to be a good coach, I mean, you're just trying to keep people accountable to go to the next level, right? So I don't know. I mean,
it's a different skill.
It's a great skill.
So, and I hear what you're saying because one of my favorite examples for this is the Phoenix Suns coach back in the 7 seconds or less. Did you ever go watch some pregame shooting around? So the Suns coach, they took Boris Diaw, made him a great three-point shooter. Everyone was an amazing three-point shooter during the 7 seconds or less era, right? But if you look at the Suns shooting coach, he would go out there and correct their form and make sure they were shooting well, and they were. And he had the worst freaking form I've ever seen. I'm passionate about jump shots, shooting it right, getting your elbow in, follow through, fingers spread, all that good stuff, right? The guy couldn't shoot worth anything.
But he's a great coach.
Great shooting coach. Amazing shooting coach. But I guess the reason why I was adding that nuance is there are some people out there that have no idea what to do whatsoever. Make sure they at least know what to do in order to hold you accountable.
Well, and everybody's personalities are different. So just as long as you're in line, I know, I mean, as your business, I mean, who do you go to keep you on your game? Right. Like, I mean, for me, you can have a spiritual coach. You have I went to spin class today. This gal, she's 50. I think she just turned 54. I mean, it's unbelievable. I think this is her 4th spin class today by noon. I don't know. And she is amazing. She crushes it, and she keeps me motivated and coming back to do that. I just love it. And I don't know. If anybody spins, it's fun. You sweat to death out there.
As we wrap up, is there any lasting thought or last thoughts you want to add?
No, I mean, I think that what we're doing today is just another tool in the toolbox, right?
Right.
There's opportunities out there. The $4.7 trillion secret. Did we talk about that earlier? I have a book. I'll give it to you. So if you can, you guys can email me at eric@ericbuyshomes.com. I'll give that to you guys. It's about private money and the whole thing. And I don't know. I just starting almost 15 years ago, the key for me in this business is cash flow. Like, I think cash flow is the key, and make it as passive as possible. So that would be my thing. You have anything for me?
No, I mean, it's a massive inspiration. I mean, I when I heard you speak about cellular care, I was like, I got to have this guy on the show and pick his brain because I want to do this.
Yeah.
And we're going to do this. Okay, so guys, if you got, again, value from the show, please share this episode right now. And if you guys want to get a hold of Eric House, we talk Eric at ericbuyshomes.com.
Eric at ericbuyshomes.com is good. And then, or go to ericbuyshomes.com. Mm-hmm. Our phone number's on there. Okay. I don't even know the phone number on the website because I never use it, but it'll get to me. It'll get to our office. Yep.
Cool. And then we do have a special guest tomorrow at 4 o'clock. It's unusual, but he's an out-of-towner, so anytime someone's flying in from out of town, if they want to do a show, we'll always be glad to have them, so long as they've got a track record. So Zadie, he's had 100K months, and he's going to share how he's done that. Again, Eric, thank you for being on the show.
Awesome.
Appreciate it.
Thanks. I hope I helped out.
Thanks, guys. Oh, you definitely did. If nothing else, you inspired me.
Right? Good. Hey, that's what it's about.
All right, and I'll see you guys tomorrow.